what happened with mutual funds back then, 2000 and 2005, that phase, I think portfolio management services, PMSs as they're called, I think some sort of a transition that's happening now, because earlier this was an investment for only the uber rich, the ultra rich.
So actually, if you see Surabhi in the US, for example, the retail money goes into the Vanguards and the BlackRocks of the world. And the smart, intelligent, large money tries to find niche portfolio managers who have owner-driven organizations. So you know that this is the guy who's going to manage your money all your life, which is unlike, say, a mutual fund where fund managers can change. And also they have limited capital, so they can do a lot of things which mutual fund maybe might not be able to do. Having said that, mutual funds are the best ways of investing, despite we running a AI for or a PMS.
Really, you still say that?
I think so. It's very simple, particularly for people who want to do SIPs and those kind of stuff.
I must ask you a bit about the mood that we are in today. There is a lot of talk about high interest rates in the West or what's happening now with West Asia. So there seems to be some trepidation or maybe anxiety. I don't know what's the right word for it, but something, I think, just making people be a little more towards the edge of their seats. But how do you feel?
The Indian economy and the Indian scenario is like on a highway driving fast. But on the Western world and the world in general, geopolitical and all, we have huge speed breakers. So I think we are right now in a phase where the Indian economy wants to just speed up.
Yeah.
But there are global speed breakers which are ensuring that you just don't go berserk. So I think we are in a nice balance where India is outperformed because the domestic is looking very good. But yes, it's not running away because the global is challenged, both on the geopolitical side as well as on the economy side.
The last time US interest rates were as high as where they are today, what followed was a global financial crisis. Now, I'm not saying that the same will repeat. Then you have, someone like Mr. Jamie Dimon saying that this is probably the most dangerous era that we've been in the last many decades. So should we be scared?
So, we are in a world where there are so many countries and so many things impacting us. So we should be aware of everything. I would say it was not wise to say that we should just ignore. We should be aware of it. At the same time, the only difference this time vis-a-vis, say, a Lehman Brothers or some other events in the past, that time these were unexpected. Now, this time it's all getting built up slowly. So it is something which is, sort of discounted to some extent. So unless it worsens significantly from here, I think more or less we are aware of this. And at least our view is that from here things can only improve, at least as far as the interest rates in the US is concerned, inflation coming off because there's a base effect, prices of commodities, agri, chemicals, except oil, which has moved up because of geopolitical reasons, that also nominally. I think everything else which contributed to high inflation has come off. So inflation also logically should come off, and that should ease the interest rate scenario. But we have to track them. We just can't ignore them.